Okay, so we're gonna try this again. I'm sorry. I do apologize for um, not actually for my computer going down, and at this particular point, it's actually not even showing my camera, which is not great. But either way, we'll go ahead and move forward real quick. I'm gonna talk through it and go through where we're at. For the people that are watching on Facebook, anyway, y'all already get the drill when it comes down to that. Sometimes it happens. I just want to make sure we can end up going from there. If you have any questions, please make sure you write it in the comments bar, and we'll end up going from there. So let's take a look at the charts real quick. I was going through and taking a look at gold. Remember with gold, we're looking at this overall triangle being able to be broken to the top side. If that does happen, then after that, we're looking at being able to take a trade once the market ends up breaking out of that triangle area. Here goes your overall triangle move. From this particular point, I would say if we're looking at being able to get in, I will focus in on the overall low of this overall market. And then after that, look to be able to trade on a daily move from that position. Let's go to the weekly real quick, and I just want to update this so we can be able to see it. Weekly, we have a C. That C is going to end up being right here at this line right here. Okay, that's that. Make a horizontal line. That will be about right here from this position. We're looking at being able to get back in for another position. We'll end up going around the. Give me a second. Let's see. There's another fractal low that we could pay attention to right around the 1700 area. From that 1700 area, then after that, we can kind of get an idea. So I'm going to go to the daily. I'm going to look at this move and kind of correlate this real quick from this chart so you can kind of see exactly where I'm coming from based off of this. So market, the extension is expected to be at 2098. Actually, that's wrong. Let's go back. It should be right around this. There goes your fractal low. Okay. Market, the extension is at 2172. Okay, that sounds a little bit better. As long as it's still within this triangle, then that means that you're going to end up seeing that you're going to have some up days, some down days. You're not going to see the market be in consolidation. I'm not going to trade gold until it actually ends up breaking out of that position. You can look at the 2 hour and kind of get a better idea about what's happening with this market. If it does break out of this overall area towards the top side, then after that, you can see that if you want to be able to trade it once it ends up breaking out of this overall support, turning past support and future resistance, then after that, take the trade. If it does not give you that overall move and it breaks towards the downside, then I will look at basically doing the same thing, allow the market to be able to fall, let it hit and go past support into future resistance, and then after that, being able to trade it to the downside from there. And that would be a trade that I would be looking for right now at this particular point. Currently, right now, I wouldn't necessarily trade it as of yet because, once again, only time that you should be trading any type of triangle, any type of support or resistance is when you know when the market is giving you a defined support or defined resistance at that point. If it's not giving you anything, kind of like what's happening right here or these few different areas for it being able to buy, or you're looking at selling and saying that it was going to end up being weak. Kind of like what happened right here and kind of like what happened right there, these 2 points, then there's really no trade to be able to take. So currently right now with this at a standstill and waiting. I want to go over the New Zealand dollar, Japanese yen. I wish I could have showed y'all this while it was actually going on. This is one of those 2 hour trades that I was talking about for being able to scalp the market. I am selling this overall, and this is more of a scalp play. So sometimes when you're scalping the market, you have to understand that sometimes this happens. You have to hurry up and get out when it comes down making a trade. So New Zealand dollar, Japanese yen overall, if we look at the weekly, the market is going through this overall channel towards the downside. Currently, it's at a high price of this overall triangle, and it's already done hit this overall resistance area again. Right here. So we're looking at being able to trade this. As you can see, it's done hit resistance a few different times throughout the many months of this overall trading, and it has failed down to support. So the biggest thing that I'm looking to be able to do at this particular point is being able to sell. So currently, right now, we look at the stochastic. The stochastic is in the no trade zone. It's moving from the sell zone to the buy zone on the weekly. That's not necessarily the thing that I'm truly paying attention to. I'm looking at more of this support and resistance line that has been broken at 71 at 71.50. as long as it remains to be below 71.50, I am interested in being able to trade it as long as if there's a counter trend line break toward the downside. So that's our overall move right there. That's the overall support area. Let's go to the daily. Let's take a look at it again. Oh, excuse me. So yesterday, the market ended up having a huge push up for buying, and I ended up catching it at a 2-hour sale position. From that 2-hour sale position, I ended up taking a sale earlier this morning. Typically, my scalps typically go from the 2 o'clock morning sessions. I feel like I have a better feel for it scalping in the morning like that. But if we're looking at this overall move, let's talk about just the 2-hour in general. And looking at this overall fractal high from 71.50 to where this market is moved, we can see that this market has hit 71.50 and has retraced 3 separate times at this particular point. So right here, went up right there again. So it has basically kind of retested already for this overall top position area. So what I'm looking for in particular is that, can we get a high price, essentially? And real quick, just so I can make sure I have the right fractal. All right, so there goes the high position right there. Can we get a high price? And from that high price, can we look to be able to sell toward the downside? Currently, right now, we're talking about an ABCD swing. This market is going from this position. Market went to a low price, went to a high price. From this high price, the market is expected to go down to a low price, which will be right around 68.55 for the daily move toward the downside. This will be the first swing of this overall move. All right, so that's the position to be able to pay attention to. Now, from there, this market ended up hitting 71.16 a little bit earlier this morning. That's the 618 of this overall move. That is a very high price, and we can see that the market has consolidated around this area or tried to be able to break past this area and has not been able to as of yet. So we just put this a little bit of a triangle right there, a rectangle in the area. You can see that market has went up to 71 and has been struggling to get past that area. So let's talk about the trade that I ended up taking a little bit earlier. When I ended up seeing that this market gave this overall bearish engulfing candlestick right here, I ended up taking a trade earlier this morning within that bearish engulfing candlestick. There was a counter trend line break that ended up happening within that point as well, which ended up being right here in this area. As soon as it ended up breaking this trend line right there, I ended up getting in, I believe, at 71.90. I'm sorry, at 70.99. I didn't get 71, but I did get 70.99. Since then, this market has fell down towards this overall point. We look at point of control and try to see exactly where the market could be able to fall. It actually ended up falling right to a 50-day moving average, which was at 70.76, and then after that started to pop up to the upside. So that means that the market could go back up to possibly 70.92, again retested from the backside before actually falling down again long term. So I am interested in being able to trade that once it ends up popping back up. Typically, when I end up trading it, when I end up scalping the market, I end up going to the 15-minute. Let's go to the 15-minute real quick. I end up seeing that this market ended up breaking this trend line right here. And because I am scalping the market, as soon as it broke that trend line to the upside, I was out. So I got out right here at this particular point. End up making, at this point, what was the, end up making, you reset and go to where this price is today. Okay. Going, but it was $152 for that overall movement. Currently, right now, what I'm looking for is, I'm looking for a high price to be able to get back in, and then after that, looking to be able to sell towards the downside. All right, now let's take a look at the opposite pairs. I am interested in being able to get back in on this overall pair. The only thing that I'm looking for right now is a counter trend line break if we get it, and then after that, looking to be able to sell towards the downside. Again, once that happens. So I have my alerts ready to go. Once that happens, then after that, I'll trade that to the downside from there. Let's take a look at the open pairs that we're actually in at this particular point in time. Kind of running out of time right here. Let's go to the U.S. Swiss franc, and we're going to look at the U.S. Canadian dollar. We have been paying attention to these for the last couple of days for its overall movements, and quite frankly, I think that these positions are giving or starting to give positions and starting to give points to where you look at being able to buy them long term, you'll be in great positions. So let's start off with I'm going to start off with the daily on this one, then be able to move on. If we look at the daily, we can see that the market has moved down since March. I don't know how many pips that actually was, but I know it's over 1,000. Matter of fact, let's take a look at it real quick. Since the market actually ended up moving over 1,500 pips towards the downside, since the market ended up hitting its highs in early March, when the first portion of the coronavirus started, or scare started in March. Currently, right now, we see that the market ended up breaking out of this overall area. There's a D extension that's expected to be at 1.3264. And we're actually going through a triangle again, kind of like what you're seeing on gold at this particular point. From there, typically, once again, you look for a breakout, and you look for a retest, or you just look at being able to buy in the position where you think is actually going to go. So you believe that the market is going to end up going up, then you buy the support angles and be able to go from there. You don't sell at resistance unless you're trying to scalp the market. But if you're trying to buy long term, then you will look at being able to buy up when the market ends up hitting these low positions right there. So on the 2 hour, if we look at it, we can see that the first time that we end up buying this was when the market ended up breaking past 1.3185. It broke out, it retested, got back in. That was our position for us getting in at the first position, okay, which was good. But yesterday, when the market ended up going up, it ended up giving us an evening star, which is this candlestick formation. And since then, the market ended up falling back down. Now, it ended up finding support right around 1.3133 before was a overall position, which was about right here. Once the market ended up doing that and breaking another counter trend line break toward the top side, I ended up taking a second buy at that particular point. Now, if you have not traded this yet, this is actually still about let's see, from that position that I just got in, that's about 7 pips from that position. So if you are interested in being able to trade this position, this is an active trade that I'm actually in. You have confirmation. Yeah, the market is at 51%, but I don't think that you're probably going to end up getting a better number going into next week, unless it ends up falling down again, and then after that going to the 1.3070 positions that we have been looking at. But hopefully it doesn't do that, to be honest. But so if you are interested in being able to buy, you can look at making a market buy right now at this particular point in time. From that market buy, I would look at being able to say, from that market buy, I would look at being able to say, place your stop below. I would look at placing my stop below 1.3030, and then after that, there's a couple positions that you could be able to get out at. First position will end up being the daily D extension at 1.3389. Second position will end up being at 1.3580, which is the point of control for the daily position. So it's about a 400 pip move toward the upside that I am interested in being able to go through. This is a swing trade for me. For some people that like scalping the market, you can look at this being able to make 15-minute or 2-hour buys all the way up into this overall position long term. If you're like me that like scalping the market, I will look at being able to get in once you end up getting low prices and value to be able to get in for those overall prices. So I am interested in being able to do it that way. Let's take a look at the U.S. Swiss franc before we get out of here. Kind of running out of time. Remember, I am a teacher, so I have to be able to get ready for my students that are actually coming in on this Friday morning. Let's take a look at the U.S. Swiss franc. On the U.S. Swiss franc, there we go. On the U.S. Swiss franc, kind of the same move that literally just happened. Well, I have been looking for it, but it ended up happening a little bit earlier this morning. We go back to the daily. The pair that has been doing the best against the U.S. dollar is the Swiss franc, and it's not even close. Now you could say the Eurozone has started to be able to get a little bit stronger over time. And I do expect that the market is going to end up going up to 1.20, possibly 1.23 over time. But you can see from a weekly perspective that this market has been just falling since it ended up hitting around parity at 9,900. I'm sorry, 1.00. Since then, market ended up dropping down. It's at 90 right now. I think that it's great value of being able to get in for the buy. We can see that this market has broken the trend line towards the upside, but we're starting to see a little bit of consolidation. Reason why we're seeing consolidation is because this is the accumulation area. I do believe that buyers are basically placing in their buys at this low price and looking at being able to trade for the long term with this move. So picture this as like in March when Tesla was $78 a share, being able to get in when Tesla was at $78 a share, and then after that cashing out when the market ends up getting up to $300 to $400 once they're doing a stock split, or being able to take a little bit of profit once the market ends up moving from there. I think this is kind of like one of those same positions. You can be able to be patient, allow the market to be able to put you into a good position and allow you to be able to create passive income while you're just trading, while you're just sitting there and letting the market basically move. Now, you have to have patience because obviously, just like with any market, the market does swing to the upside and to the downside. But overall, I think that we're in a great position from here. So my first trade that I ended up getting into was at 90.50. We end up seeing that this market has fell below 89, and that was the lowest price from there, or your fractal low. From there, it ended up breaking the overall trend line and then moving to the downside. Remember, we said that we wanted to break out, a retest, and then after that, a move from there. Currently, right now, we can see that the market is in the buy zone. This is the first pair out of all of the U.S. pairs that is basically going through this move first. So typically, remember, we looked at the U.S. index and we said that, okay, well, if the U.S. index is going to end up bouncing at 11,950, then most pairs are going to probably make the same type of move. Well, if we look at it, the U.S. Swiss franc is the leading indicator right now on what's happening with this move. If this market ends up breaking up and start to give a strong push, then you should expect to be able to see the same thing to happen with most pairs when it comes down to this, especially like the Australian dollar, United States dollar, New Zealand dollar, United States dollar, obviously the U.S. Canadian dollar, and being able to see what's going on with those pairs. I will look at being able to look at doing a basket trade instead of just trading one pair, because I think that the U.S. dollars is starting to have some strength that's getting ready to come before this election is about to happen. So this is where you can be able to make your bag. You just have to be patient when it comes down to it. So let's do this real quick. I need to erase all of this stuff right here. Okay, so overall, we're looking at this move. We have a counter trend line break towards the top side. The market is in the buy zone. If we're looking at this overall swing, the first swing that I would look at is it goes to a fractal low. From this price, we have a D extension that is expected to be at 93.24. Initially, I ended up putting it at 9,300 as an overall move. I'm probably going to keep it at 9,300 right now. But because we have a fractal low to be able to go up, and we have 2 days of overall bullish movement, and the market has hit the 618, this is a confirmed move at this particular point. So once again, if you are interested in being able to buy, this is the time to be able to buy because the market is in the buy zone. Once the U.S. dollar index gets into the buy zone, you're going to start to see a lot of traders start to get in and look to be able to buy at this particular point. So here goes the swing. I'm actually going to end up having this as one of my featured stories on this one. A to B to C. This was your low. The extension is expected to be at 93.24. I placed my stop at 89.50. Once again, I always like having my stop well below the overall A. It gives me a chance of being able to have a breakdown of where the market is going to end up going anyway. So that's my biggest takeaway from that. Stop loss, if you're going from here, will be about 151 pips. Take profit from here will be about, if you go all the way to the top, it will be at 226 pips from now, or you can go 203 pips from there. If you want to bring your stop a little bit closer, you can. I would go at 89. I would probably go 89.80, make it about 100. Make it about 100 pips at this particular point. I'm sorry, about 110 pips going after 220. So you got about a 1 to 2 risk reward ratio. It's not the greatest risk reward ratio, but understand that sometimes you got to trade like that to be able to get some type of reward. So that's where it is. Just lower your risk. Right now, I think being able to keep your risk at a minimum rate, or actually being able to go in on your risk right here, and then after that, lowering your risk while the market is actually going up will actually end up being the best thing to do. Okay, so I'm going to focus in on the 2 hour. We have that break. Market broke the trend line. This is a beautiful move to the upside. I would say if you're looking at being able to trade it, this is the time to be able to do it. And and be able to go towards the overall long-term daily D extension, and then go from there. So that's going to end up being the final pair for today. For this overall move, we have our break. This break is starting to happen as we speak. Obviously, this is what we do from an overall trading perspective each and every day. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you end up subscribing to Carter Cow, subscribing to Carter Cow Trading on Instagram, and make sure that you end up going to Trade with Travis on YouTube and subscribing. I have no subscribers yet, which is, I mean, it's only 3 or 4 videos in, but I would like y'all support when it comes down to that. Obviously, I put out this content to be able to make sure that people can be able to learn how to be able to trade, and that's the only way that I can be able to get everything rolling and keep everything rolling. Will end up being by y'all support and being able to. So, if y'all would make sure that y'all end up subscribing to that, so we can start being able to get those numbers up and be able to go from there. Now, like always, once again, disbelieve in yourself, change will end up happening. And then after that, make sure that you end up planning your trade and then trading your plan. Everyone, y'all end up having a great weekend. I'll see y'all on Sunday. Take it easy.